Hey folks, it is Vic Noble here with another weekly trade example for you for the week ending May the 7th of 2010. Boy, what a wild week this one was. Just incredible global turmoil and things going on. But I want to show you guys something. And this is, I want to talk to you this week about keeping an eye on these higher time frames. I'm going to harp on this all the time. But I tell you what, you start keeping an eye on your higher time frames, your trading is going to improve if you'll listen to, learn a few basic rules about these things and how price action works. And I'm just going to show you on this. This is a U.S. Canadian chart of the 1 week, a weekly chart. Okay, U.S. Canada. Resistance, resistance, resistance. Look at it all in here. See what happens when price breaks it finally? It becomes support. Don't be careful about selling when it gets down to here because this is expected to be support. You can look for patterns to buy off of this. This is back in September of 2008, right? It didn't come back there until almost over a year later. And look what happened when it hit it again. Isn't that incredible? Market's got great memory. 103 gets hit again and it bounces. And it hits it again, it bounces. And it hits it again. And this time what happens? It goes straight through. You have to, so what are you going to do here? Do you buy or sell or wait? What you want to do is wait and see what price does. Let it show you the way. In this case, it finally breaks. Look what happens when it comes back to it. I'm going to move this ahead a bit. Oh, it's resistance now. Isn't that amazing? Where would we expect support? Next Fibonacci level down here, by the way. In fact, let me mention this. Here's a Fibonacci level here. You can see we got some bounces off of this. What's more important, Fibonacci levels or price levels? Well, price levels. Prices. This is real. This is exactly where traders were unwilling to take price any further. It's by far the strongest. That's what you want to pay attention to more than anything else. Okay. Fibonacci's are valuable and pivots, but they're tools to go along with price action. Comes down to here. Now look, we're watching this level. This is a place where we could expect that there could be some support. You see this? Could be some support here, right? Price comes along, hits it, and what happens after that? It starts to go back up, right? What are we going to do down here? Well, what if you saw some price action that was positive down here, for example? That could be a pretty good trade. See, right up into this level right here, we could expect price to be up to here and up into here. These are price levels that are shown to be levels of, well, in this case, support, now resistance, and here, resistance again. Remember that this is like 107, okay? Now, let's go to a daily chart. Now, watch this. As price came down on the daily chart to the 79% retracement that we just saw on the weekly chart, what do you see here? Hey, look at this. Price is going down. The MACD is going up. Now, isn't that something else? That's where we expected that there could be support, right? What happens? Up she goes. What is your thinking here? What is your thinking here right now? Your thinking should be buy the dips in an uptrend. We're heading up. Now, I'm going to go down to a 4-hour chart. Now, I'm going to show you some things on that. I'm talking about support and resistance the whole time. Now, this is as low as I'm going to go is the 4-hour chart. How low can you go? This is a stupid joke. Anyway. On the 4-hour chart, I want to show you something here. Let me get rid of this for a second here. And I just want you to focus on this. Look at this resistance in here. Isn't that something else? If price were to come down on the 4-hour chart, could we expect this to be support? Of course. Not only that, now I'll put this Fibonacci level back in. This swing that from the low that it hit on that 79% drop that we just saw on the weekly chart up to the current high happens to be almost exactly 62%. This is an area of interest, guys, right there. Price comes down, spikes down into it. Wouldn't this scare you? Now, you don't even have to buy now. You can wait to see what price is going to do. Because the reason why we would want to wait, why would we want to wait? Risk. Because you don't know how much you have to risk with this, right? If price starts to rally, which it does here, then you can start to look for patterns where you can get in on this trade with low risk. You want to know something, by the way? I can show you how to get into this trade here with a 20 pip risk. Well, how would you like that? Would that be something that would be powerful for you, valuable? I mean, that's incredible. 20 pips risk. You know where this thing went to? Do you remember we said on the weekly chart to watch out for those levels on the way up for reactions? Let's go back to them and just have a quick look at those just so we are clear on that. Go back to the weekly chart right here. And that's right here. Remember we said, first of all, 102.75 basically and 107. 102.75 and 107. Okay, so here's coming up on this 102.75. And we'll just Move this along. Had a little reaction here. That was about it. Okay, and then it really took off. Now this is when things started getting pretty hairy this week, and beyond that, I mean, this thing went absolutely nuts, and we ended up going up to as high as, guess where? 107, right where we thought. Let's go back to our weekly chart. I'll show you how that looked on the weekly chart. Now, I'm not saying that you would have, been able to get all that move. That's fair enough. But here we are right now at the current week. Look where it's gone to. Is that amazing? So if you were long on a trade like this, definitely you want to look for places like this 102.75 and 107 where we're going to expect there to be some resistance. Now you can stay on these by trailing your stop along, or maybe you have profit targets along the way. That's fine too. But the point is that you've got a game plan in mind. And again, we'll just move this ahead here, and you can see how the daily price action played out. This is the current price action right now as I'm recording this, but all set up by paying attention to the weekly chart. You should do this on all your charts. Pay attention to what's happening on the weekly charts. Where is the support resistance levels? What's the candle action look like? Is it positive candles at a expected area of support? If so, drill down to your smaller time frames and look for reasons to be buying the dips in an uptrend. That's what it's all about. And if you find ways to keep your risk really small, which is something I can certainly teach, or I have some great little methods for doing that. Those are the kind of trades that you want to get so that you can keep. I mean, imagine getting into a trade like this with a 20 pip risk. A 20 pip risk. I mean, what's the profit potential in this? It's gigantic compared to your risk. It's huge. See? So that's what it's all about. Controlling your reward to risk ratios, and of course your risk management is just key to everything. Right? Anyway, I hope that helps. Pay attention to higher time frames. That's the theme of this week's training example. All right? Have a great weekend, you guys, and I'll be back at the end of next week with another weekly trade example. Thanks.